Is the US trying to use gold to pay for the federal debt of over $36 trillion? So let's discuss about it. So this here is the actual chart. So you see how it is growing exponentially. So everybody knows about it, how it's unsustainable. But if you follow this podcast, you understand that it's a little more complicated than that, since US debt is used as collateral to generate liquidity. So this is why it is so important. But this here is even more important, which is, so all of the efforts with Doge, Elon Musk leaving the government because he could not actually take care of the government, as if it was X just trying to cut spending on the former Twitter company. You can just fire people, just reduce spending, and so cut costs and just make a profit. But the government does not really work like that. So when you see the breakdown, and this here you can find on our BI number 21. So links are on the description if you want to see exactly the breakdown that we did here. So you see that the autopilot part, that's the problem. So you can't really change it because that's just going to grow, and it's something that is part of the budget. The discretionary part, it's something that you can for sure try to control at least. But the strategy is the opposite. So let's try to outgrow the debt and make sure the economy grows, and then we go from there. So that's basically what the administration is trying to do. So we don't know if they're gonna succeed, but for sure there are other ways using smart bookkeeping, so to speak, or accounting to try to offset with something that we already have, or the US already has, which is gold. And gold, as you know, it has just been skyrocketing. So not like Bitcoin, but very similar lately. So still around $3,350, so $3,300, almost at all-time highs. And creating a lot of talk about why has it grown so much, because it was almost a decade that it did absolutely nothing, just sideways for a while, at least for 2 years. And then all of a sudden we see, so since 2023 and especially 2024, that absolutely caught everybody's attention. And then we have the speculation about China's central bank, the PBOC, just buying a lot of gold, trying to do a revaluation, and also Russia buying a lot of gold reserves as well as the United States doing exactly the same thing. So the idea here is to protect themselves against something. Are we actually creating a whole reset? Are we revaluing the whole thing? The idea, so China actually is doing something similar in what comes to getting back to a gold standard, where they expanded the Shanghai gold exchange to Hong Kong to make sure that whoever international users could trust the RMB and exchange it for gold. So in a way to expand the international system, the CIPS, to compete with the SWIFT system, which is the dollar system. But the United States is trying to do something different. Actually, it's one of the ideas that are floating here, which is pretty interesting. This is straight from the Fed's website. So basically, they say, so an official reserve revaluation. So with public debt at high levels, some governments have begun to explore financing additional expenditures without raising taxes, while also not increasing public debt outstanding. So one possibility is using proceeds from valuation gains on gold reserves, as has been floated in the US and Belgium recently. And this is the most important part. For the US, this will involve revaluing the government's 261.5 million troy ounces in gold reserves, which is the largest gold reserves globally. And we still have to double check on that. There's a whole Fort Knox auditing, so we still need to wait and see. From a statutory price of $42.22 per troy ounce to current market prices, which is exactly what I just showed. So imagine just revaluing the prices to market prices, or maybe even higher, depending on what you decide. That could bring something from 11 billion to 750 billion without selling absolutely anything. And this is exactly what they say. So this note reviews the rare cases when countries use proceeds from valuation gains. So it compares to other countries like Germany, Italy, Lebanon, Curacao, Saint Martin, South Africa. So the idea here is for them not to sell anything, but just create an accounting trick that allows them to actually revalue the gold. So the idea here is so with that, you're able to get into a position where you rebalance your balance sheet so that it allows you to either offset the debt, or maybe issue more debt, or control the yield curve in order to maybe rebuy or do a stronger repurchasing from like 20-year yield or 30-year yield, the longer term bonds in the US, because they're not really used for liquidity, and getting those off the run and recycle them. So it's up to the Fed or up to the Treasury to see what happens. But the most important part is that we literally see more moves into tackling the debt in such a way that everybody trusts it. So still trusts it, because it's literally the backbone of the whole financial system, and at the same time trying to deal with the debt. And it's all about trust. It's all about liquidity production. So this could provide a lot of liquidity to the markets, so based on trust onto the bonds. So we have to wait and see, but this will be a very unorthodox way to deal with the debt, but along with investments, along with trying to outgrow the debt. So you really see many of those things at the same time, those measures from the Trump administration that can provide a lot of turbulence there. So we have to wait and see. But of course, there's also, I was looking for Bitcoin. Where is Bitcoin here? Maybe is Bitcoin going to be used at all? So this is, when I search for the word, we see here just on a footnote that in the US, the idea has come up in the context of helping to establish a strategic Bitcoin reserve or sovereign wealth fund. So exactly what we discussed before. But also part of the gold reserve revaluation, some speculate that they might also be used to purchase more Bitcoin. So we have to wait and see, because it has to have some kind of approval from the House, or so let's see what happens there. But very interesting. So how that could affect liquidity, and how the Treasury is actually making big steps towards maybe absorbing the Fed. Maybe that could be one of the ways the Fed could end, where you just have this big merge and you're able to tackle at the same time monetary policy along with fiscal policy, along with managing the reserves. But again, we still need, before something like that happens, we need to know how much gold there is actually in Fort Knox. So this is going to be very interesting to see. But again, if you want to understand exactly how those dynamics work, especially on spending, how that affects liquidity, and also how to actually get ahead of the curve in buying Bitcoin or your strategy for investing, links are on the description below, so you see all information on chain analysis, macroeconomics, and monetary mechanics as well. All right, I hope this was helpful, and see you in the next video.